equity linked saving schemes, also known as tax saving mutual fund schemes. There are some common investment mistakes people do when they are investing in ELSS mutual fund schemes. In this video, we are going to discuss that. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decisions. Before going ahead and seeing what are the common mistakes people do and how to avoid, let me give you just an overview on ELSS mutual fund schemes. ELSS mutual fund schemes are equity linked saving schemes. It is an equity mutual fund schemes and has got section 80C tax saving benefit. If you are investing up to 1.5 lakhs under section 80C, then if you are coming under 30% tax bracket, then to the extent of 45,000 rupees tax benefit you will be receiving. This particular ELSS mutual fund scheme has got a 3-year lock-in period. And this particular investment has got potential to give you inflation beating returns. And this equity linked saving schemes, like any other equity fund, has got long-term capital gain tax benefit. Now we have understood the overall features of this particular scheme. One important parameter you have to understand is, for ELSS mutual funds, there is no cap restriction. SEBI has not mandated any cap restriction like how much you have to invest in large cap, how much you have to invest in big cap, how much you have to invest in small cap. There is no restriction. So this will be managed like a flexi cap fund. Fine. As we have understood the basic key features of this particular ELSS mutual fund scheme, now we can look at what are the common mistakes people do, right? So one by one we look at it. There are 7 common mistakes people do. First one is last minute lump sum investment. If we look at the data of ELSS mutual fund investments collection by all the mutual fund companies, during January, February, March, that is in the last quarter of the financial year, they make a huge collection. That means they have to submit proofs for income tax, investments in their respective HR and their accounting department. So they rush and make investments as a lump sum in Jan, Feb, March only. When you do only in the last minute, there are 2 disadvantages. One, choosing a good right mutual fund scheme becomes difficult because in the last minute you may invest in some schemes where you get proofs quickly. You may end up investing in an average performing scheme also. You may not have enough time to do a thorough analysis on which is a good ELSS mutual fund scheme. Right? This is one effect of doing your ELSS investments in the last minute. There is one more major negative impact when you invest in the last minute. Because you are investing only in Jan, Feb, March, you are not able to average out your cost. You have to invest only as a lump sum. You don't have any other options. The entire 1.5 lakhs, you may choose to invest as like one single lump sum investment you may invest. If you could carefully plan from April to March, then you can do systematic investment plan. You can average it out. Right? During different points of market levels, you can average it out. Rupee cost averaging works out in your favor. When you are investing as a lump sum, there's a high probability for you are entering into the market at the very wrong time. If you are entering into the peak, then market corrects, you will be in a disadvantageous position. You will not be able to do rupee cost averaging, you will not be able to do. Again, investing as a lump sum in Jan, Feb, March is also less convenient. Doing SIP just like 10,000 rupees or 15,000 rupees every month is much convenient for many investors. So avoid a last minute lump sum investment. Start your ELSS SIP in the beginning of the financial year. In April, May, June itself, you start. Second common mistakes people do when investing in mutual fund ELSS. Every year, they choose 2-3 ELSS mutual funds and diversify. right? Next year again they choose 2-3 ELSS mutual fund schemes and diversify. When they do it, it becomes too many ELSS funds. You can't consolidate also in one particular year because their lock-in will get over a different period of time. So over diversification will lead to dilution of returns. It will not protect you always. So select 1 or 2 good ELSS mutual fund schemes and continue with that. That is sufficient. Even 1 ELSS mutual fund scheme is sufficient. 2 is maximum as far as ELSS mutual funds are concerned. More than 2 is definitely not required in ELSS mutual fund category. So too many ELSS mutual funds will make it tough to manage at operational level. You will have too many folios to manage. During review also, you may have to review multiple schemes to review. So that way it will be tough. Third important mistake people do is redeeming immediately after the 3rd year. ELSS mutual fund is an equity fund. It is not a fixed income scheme. It is an equity mutual fund scheme. Equity mutual fund scheme is suitable only for long term. When I say long term in equity category, it is 7 years plus. Within this 7 years period, equity stock market will have different phases, like a phase, a period of no return, a period of negative return, a period of very low return, a period of average return, a period of above average return. In which sequence it is going to come, we don't know. Whether it is going to come in one stretch, like negative return period, one stretch, or in bits and pieces, we don't know. That is why we say you wait for 7 years plus. Compounding happens only in the long run. So leave it untouched for 7 years to create wealth. Immediately redeeming after 3rd year, maybe market may be down, or market is just recovering and you have withdrawn. Right? So to avoid that, though the mandatory lock-in period is only 3 years, it is not necessary for you to withdraw immediately after 3rd year. You can commit in ELSS mutual fund for 7 years plus. That is a way to avoid this particular mistake of redeeming after 3rd year. 4th mistake is you choosing dividend reinvestment option. There are basically 3 options which is available. One is dividend payout. Number 2, dividend reinvestment. Number 3, growth option. Out of all these 3 options, which is the best? I'll give you the order, right? The first option is growth option. Because you are investing in growth option, you have got compounding effect, right? So whatever the money you are investing will get compounded. So that way, in ELSS mutual fund schemes, growth option is the best option. The second best option, or I would say second option, which just got less negative impact, is dividend payout option, where you are actually investing, and when you are investing the same year, there may be some dividends. When you are investing in equity, your idea is to create long-term wealth, to generate long-term wealth. What is one important factor is power of compounding. When there is a dividend payout, when some portion of the return is paid out to you, then the compounding effect is not happening. So to create long-term wealth, you should have power of compounding. The power of compounding to work in your favor, you should not opt for dividend payout, because when the dividends are paid out to you, you will not have power of compounding. As a result, it will be difficult for you to create long-term wealth. So dividend payout option also can be avoided. The third one is the dividend reinvestment option. This is the worst option in ELSS mutual fund schemes. In fact, all mutual fund schemes should limit their ELSS funds with only dividend payout or growth option. Even SEBI can consider like removing dividend reinvestment option in ELSS mutual fund. Why? Say you are investing in ELSS mutual fund scheme. Let us say you are investing 1 lakh, right? And after 1 year, they are paying, let us say, 10,000 rupees dividend. The dividend is getting reinvested. But remember, ELSS mutual fund has got 3-year lock-in. So the money which has got reinvested after 1 year, from that date onwards, you will have lock-in for 3 years, right? So this will have a perennial lock-in period. The entire 100% of the units will not be like lock-in free. Right? Some portion of the units will have always lock-in ELSS. It will lead you to a continuous loop. You will not be able to liquidate 100% of the units at any given point of time. This is the major challenge with dividend reinvestment option. So dividend reinvestment option is definitely a complete avoid. You have to avoid a reinvestment option in ELSS mutual fund schemes. Either choose growth option, which is the best. If you are looking for some kind of regular income, then in that case, go for a dividend payout option. No to dividend reinvestment option. Fifth one is concentrating on short-term performance. This is known as the recency bias, right? Recency bias is one major challenge with ELSS mutual fund schemes. Whatever the recent performance, people pick and choose and invest. Don't do that. Look at quality players, look at the rolling return for the last 5 years, 7 years, 10 years, you look at it. Then based on that, you go ahead and select. Simply looking at the last 6 months, 1 year, 2 year, 3 return will not work. Look at rolling return. Rolling return will help you remove the recency bias. Next mistake what people do is not understanding the fund category. I told you in the very beginning, ELSS mutual fund, there is no restriction on the cap. It is managed like a flexi cap. An ELSS fund may be large cap oriented fund. Though they can invest like a flexi cap, the fund manager may be risk averse and choosing to have like a predominantly large cap. There may be another ELSS where the fund manager is predominantly choosing mid cap and small cap. You can't compare both as an equal funds, right? This is large cap oriented, this is mid cap oriented. Another fund will have large, mid and small. It is a flexi cap kind of fund. Then in this case, understand what is the actual risk adjusted return, where the risk is higher, whether the return is adequately compensated based on the risk they have taken. That we have to understand. So look at the underlying portfolio, what kind of risk they are taking. To the extent are they delivering risk adjusted return? Don't simply compare the returns, compare the risk adjusted return. That will help you choose the right kind of fund category. Based on that, you will be deciding. Next, just for tax saving purpose alone, people invest in ELSS mutual fund. From financial planning perspective and long-term wealth creation perspective, link your ELSS mutual fund also to one of your financial goals, right? Like your kids' education and or like kids' wedding or your retirement or buying property. You attach the returns, like whatever the return you are going to generate in the long run after 7 years, map these returns to one of your financial goals. That way you will be able to have a complete and comprehensive view of your plan. Otherwise, when you limit only to your tax saving investments, you may be short-sighted, right? So don't just invest only for tax saving purpose. Invest keeping your big picture of achieving all your financial goals when you are selecting an ELSS mutual fund schemes. You have looked at all the 7 mistakes commonly people do in ELSS mutual fund schemes. Also, I have given you a solution. How can you overcome that? Out of these 7 common mistakes, whichever is you think it is your favorite common mistake or you see people committing it more frequently, please comment it. And if you find any of these 7 solutions we have given you seems to be really appealing to you, please comment that also in the comment section. If you have any further questions with reference to ELSS mutual funds or any other investment options, or if you have any questions related to your financial plan or financial goals or long-term wealth creation, you can feel free to book a complimentary appointment with our financial planner. The appointment booking link is given below this video in the description box. Would you like to attend insightful investment webinars? We organize regular complimentary investment webinars which will help you to know the techniques, strategy for long-term wealth creation, achieving financial goals. The registration link for booking your seat for the investment webinar is also given below this video. Thank you. I'll see you in the next video.